It's an honor to be here with such a distinguished panel to talk about why brand is a strategic asset in finance. Having worked with Tony Blair to build a great investment banking brand, and having founded a venture capital firm that's focused on investing in brands, I have some perspective in this area. However, nowhere near the perspective of the leaders we have with us here today. This is the first time we've assembled a panel like this for a brand discussion at the Future Investment Initiative. We're delighted to be joined by Mohammed Sayyad, Head of Corporate Brand, Marketing, and Strategic Advisory at PIF. We also welcome David Haigh, Chairman of Brand Finance, the world's leading brand valuation consultancy. And Greg Handrick, Managing Director of Lippincott EMEA, a leading brand consultancy. Gentlemen, thank you for being here today. Let's get started. I think we can all agree that branding is considered a vital asset for financial institutions like sovereign wealth funds and asset managers. Mohammed, you are a leader in strategic communications and marketing and have been a driving force in building PIF's brand into the incredible sovereign wealth fund brand that it is today. Please tell us about PIF's brand, its heritage, and how it has evolved to reflect the broader goals of Vision 2030.
Thank you, Jackson. First of all, it's my pleasure to share this session with great leaders and people that I have a lot of respect to, David and Greg, and of course, Jackson. It's great to share this session with you. So maybe a lot of people, they don't know about the history of the brand of PIF, and it's an old brand. So a lot of people, they don't know that our establishment was 1971. So it's an old brand. However, the whole mandate of PIF has been shifted with the start of the Vision 2030. So one of the major objectives of the Vision 2030 is diversifying the economy of Saudi Arabia from being dependent on oil. And PIF is leading this kind of vertical of Vision 2030. And since then, we established all new sectors in Saudi, and we have developed and accelerated all sectors that we worked on. We established 103 companies, and we have assets under management at the moment with $925 billion. And when we look at the brand that we inherited from 1971, it was a shift as well with everything we are doing under our brand, that we wanted to, let's say, challenge the norm, that with everything PIF is doing and everything PIF introduced in terms of like the investments that we created, we wanted to have an agile brand and a smart brand and an advanced brand that will tell this kind of story to the external world. And a lot of people, they don't differentiate between the brand and the branding. The brand is everything. It's your story. It's everything. It's the meeting that you hold. It's the partnership you start. And it's the investment that you pursue. So everything around this E360, let's say the 360, the story of your activities, it's your brand, and it's the translation of your brand.
Thank you. Thank you, Mohammed. Mohammed, what are the key pillars of PIF's brand strategy, and how have you activated the brand to support the fund's new mandate under Vision 2030?
So we have a North Star for our brand, which is invested in better. It's our purpose, and it translates everything we do under our brand. It defines who we are in PIF and how we translate our activities. And under the invested in better as a platform, and as a purpose that we are doing, there are three major commitments as a brand commitments that play under the brand of PIF. The first one is accelerating the growth of strategic sectors. And this is a reflection for our strategy and our investment strategy and how we build all the new sectors that we established in the Kingdom of Saudi Arabia, and you name it, from entertainment to technology to AI, etc., etc. And the second commitment is stimulating opportunities and new partnerships. And this, like you see it, part of the activation we do in our marketing activities, in our sponsorship deployment, etc., etc. And the third, brand commitment, which is shaping the future of living and working. And you see it deployed in everything in our portfolio companies for the way forward. Together, it represents who we are, and it defines our story. And of course, we support everything. We merge everything we are doing from a creative and storytelling point of view with the science and the logic as well. So we have invested a lot with our partners here with building a lot of tools and research and studies that will support us of tracking the performance of our brand to make sure that we are on the right track in terms of the activation of our brand.
Thank you. One more question here. Why is brand considered a vital asset for financial institutions like sovereign wealth funds and asset managers?
So if you look like from a financial point of view, the currency is the most important thing that will represent the money. In the brand world, the currency of the brand is the trust and the credibility. And you see brands with credible track of record, they have more opportunity to achieve more in terms of like achieving and deploying more investments that will be more meaningful for the future of the country that we're playing with.
Great points. Greg, what are your thoughts?
So regarding the strength of a brand for sovereign wealth funds and asset managers, honestly, I'd say that up until now, historically, they've not actually been as important as we might think. That might surprise you coming from a brand person, but you think about it, whether you're a BlackRock, a KKR, a JP Morgan, honestly, you could operate a little bit under the radar, and these brands were almost more like a seal of quality. It meant, hey, you can trust us because we're big. But I think that's changing. I think it's changing rapidly. Social media means that a brand no longer just represents what it says on a website. It represents what other people are saying about you. And with the advent of AI, this is going to accelerate massively. And it's no longer going to be enough to actually just have a great name, a slogan, and a wonderful, beautiful website, because AI is picking up information from social media feeds, from the press, from forums. It's aggregating all of this into one space. I mean, little anecdote, it amused me. My son is applying to university, and he needed to pick 5 universities. The top 2 he knew, the other 3 he didn't. Where you and I would have gone and asked people, what do you think I should do? He asked ChatGPT. He literally plugged into it. What should I do? Where should I go? The way that sovereign wealth funds and wealth management worked up until now is about to change. Because we won't be just relying on the power of a brand, we'll be relying much more on AI. Now the key thing here is, how does AI work? It prioritizes brands that have an ecosystem of messages that is consistent. Because the more it hears the same thing, whether that's from the brand itself, or from investors, or from customers, the more it will then say, right, that's correct, let me feed that back. So the key strength of a brand now in this space is a brand ecosystem, which is exactly what Sayyad was just talking about. Having an ecosystem that is consistent and going throughout not just your own assets, but all of the different pieces going on.
Thank you. David, you're an expert on the merits of a strong brand, having lectured at Harvard and authored pieces on the topic in the Financial Times and other prestigious publications. You've built the world's leading brand valuation consultancy and have valued PIF as the most valuable sovereign wealth fund brand in the world. How does a strong brand contribute to securing trust in the financial industry?
Well, before I answer that, could I just refer to one of our studies, which is something that we've been doing for about 30 years, that demonstrates the financial value of brands. We call it the Global Intangible Finance Tracker, and we look at all 112 stock markets in the world, and there are 43,000 companies registered on them. The total value of those companies is $170 trillion. Of that, 100 trillion is intangible, and by our calculation, about 25 trillion of that is their brand values. There are things like patents and goodwill and all that kind of thing, but 25 trillion is brands. And I think that really just in stark financial terms demonstrates why brands are so important. Now, historically, as you were saying, many sectors didn't take any interest in brands. They thought brands were irrelevant to them. But it's becoming increasingly clear in just about every sector, B2B and even B2G, that a brand makes a big difference. And why does it make a big difference? And the reason it makes a big difference, to answer your question, is that you have to win the trust of your stakeholders to take actions which are economically beneficial to you. They'll come and work for you. If you've got a bad brand, good people won't work for you. If you've got a bad brand, lenders won't lend to you. And if you're an investor, investee, I beg your pardon, investees don't want you investing in them unless you have got a good brand. And it is particularly the case in financial services. The other study I would refer to is one that we've been doing every year for about 10 years, where we ask people's opinions of the brand equity of about 5,000 or 6,000 companies worldwide. And one of the stark facts we found is that if you look in luxury, if you look in cars, if you look in B2C, consumer brands, people tend to have a very high level of trust and a belief in the reputations of those brands. Generally speaking, across the world, people have a very low opinion of financial services brands. They don't trust them. They don't think they have a good reputation in general. And so therefore, where you do have a brand, you have a massive financial advantage because people will come to you. So I think, although the sector as a whole has low opinions, and interestingly, the other side of that is, in highly regulated markets where there are state-owned financial institutions, trust and reputation are much higher. It's in the sort of casino markets where reputations are lower. So they're very important and they generate a huge amount of return.
Thank you. Greg, you're also an expert on the merits of a strong brand, having advised world-leading companies such as Aramco, UBS, and Nokia. What would you like to add?
So I'll pick up on the notion of trust, because I agree. I mean, there was a statistic from the FCA that says barely 36% of people feel that financial institutions are honest or transparent with them. So this whole issue is indeed trust, and I think the word is largely misunderstood. If you go to any financial website, the word trust is going to be everywhere. Trust us, trust this, we're trusted. But you can't claim trust. You have to earn it. And I think this is the biggest mistake with the industry. Our research as well shows that in order to build trust, it's about a value equation. They would be saying the exact same thing, right? What I pay for, am I getting something in return that I feel is worthwhile? And when it's a no, the trust goes down. When it's an up, it goes in the right direction. And the key thing is to understand, well, what sits underneath this. Of course, performance and delivery and execution, all these things are critical. But the piece that's massively underestimated, particularly in this industry, is emotional connection. And you're going to go, surely not. It doesn't matter. I mean, I just want to know that it does well. But actually, the connection with a brand around whether it aligns with my values, around whether that brand actually cares and cares for me and trusts what I'm doing, is critical. And most don't actually pay attention to this. Again, a completely different category, but the same idea. In the airlines industry, low-cost airlines should all be about cost. Southwest Airlines in the US is famous for its low cost, but equally, its fun, jovial attitude, and it has a really loyal following. How does that translate? They lose just as many bags as anybody else, but they have 6 times less complaints. You take that same idea to the financial services, and therefore go, in good times and in bad, I will stick with brands that I trust. What does that really mean? It means brands that I feel align with my values. That is the most important thing. And what I've been impressed with PIF is it's basically saying, we're going to show you this now. So if the first 10, 15 years of this brand was all very hidden and below the radar, in the last few years, it's actually going to let us explain what we're doing, how we're making an impact, how we're driving social opportunities and progress. And I think this is going to be the key for the industry, because if we don't start showing what we're doing and why, you combine that with AI and no sort of emotional interest, well, it's a beta-driven world. No one's going to stick to brands anymore. They're just going to go to ETFs.
Great points. Mohammed, you're an expert in this. Beyond trust, what other benefits does a powerful brand offer to financial leaders?
I believe if we take it from a holistic point of view beyond trust, of course, accessibility. It's part of the value that you're going to gain whenever you have a trusted brand, that you're going to get more access to more people that you meet, more partners that you can work with, and of course, as an outcome, more opportunities that you can get and more opportunities that you can operate with and more opportunities that you can add to the business and connect different areas around the world. And maybe with a strong brand, the great thing that you will get as well the strong network, that whenever you have the strong brand, everyone will start trying to speak with you, and it will allow you as well to speak with everyone. So this is the beyond value that whenever you have like a great brand and strong brand, that will allow you to maximize your value on all layers, that will maximize the value of your stakeholders as well, and everyone benefiting from your brand.
Thank you, good thoughts. David, what are your thoughts?
Well, in preparation for speaking today, I was talking to one of my colleagues about what's the difference between trust and reputation. And she said to me, well, as far as I'm concerned, trust is you deliver what is expected of you from your stakeholders. So you say you'll do something and you deliver it. And your reputation is the ongoing long-term delivery of that statement of trust. So it comes down to the fundamentals. Do you actually do the fundamentals well? And I think one of the things that's often forgotten is that brands are not about advertising, they're not about marketing or promotion or communications. They are about getting all the fundamentals right first, and then the marketing really just amplifies that message. And certainly in my experience, PIF is extremely good at execution. It's extremely professional at doing what it does. And if you look at all the great financial service brands, they are great at what they do, they innovate, they are successful, and people begin to trust them that they will deliver that. And I know that Warren Buffett and Berkshire Hathaway are not, they're not a sovereign wealth fund, they're not an asset manager in the conventional sense, but really they were an asset manager. And the thing about Berkshire Hathaway was everyone trusted them to deliver good returns year after year in the right way, and they did. And so they had a reputation and they had trust. And I think PIF is in a very similar position.
Thank you. Mohammed, coming back to you, in what ways do you think branding helps differentiate financial institutions in competitive markets?
I think if you look at most of the sovereign wealth funds and financial institutions, if you take the brand aspect outside of the story, they have financial sheets and different products, so they are all similar. What differentiates us in PIF is the approach that we decided to take, which is the storytelling and humanizing the brand of PIF. We try to give it a face. We try to give it like a human facing that will allow everyone to engage from all layers of our stakeholder. And this is exactly what differentiates PIF from all other sovereign wealth fund. And as my dear friend Greg was highlighting, that we took the approach as well. It's not about just telling what we are doing, but educate the people about why we are doing this. And we're trying to tell them about the value that will be reflected on all stakeholders, from the what's in it for me as a person walking on the street, or what's in it for me for an employee under PIF, or what's in it for me as a partner working with PIF.
Thank you. Branding is vital to differentiating financial institutions, but as David said, another key component is reputation. Greg, why do you think reputation is particularly crucial in the financial industry?
I think that, it's a sobering thought, but I think that average is over. I think that AI is inevitably going to mean one of two things. On the one side, it means everybody now has access to AI-driven solutions. You can now have a logo, a website, a messaging. You can accelerate your social media feed, all using AI, which means that anybody from a pet shop to an ice cream parlor can just create this overnight. So suddenly everyone's upping their game. But of course, AI is feeding off itself, which means that everything is going to start to look and feel the same as well. And so the other part of the argument says, if everyone now starts to look and feel the same, but I can ask ChatGPT, I need to find an asset manager that's delivering this with this, that, and the other, it's going to give me the answer. In other words, it's going to cut through, and only excellence, genuine, true excellence, in the way that Sayyad explained, i.e. delivery, execution, customer experience, product, those are the ones that are going to stand through. So I think reputation's changing from yes, I'm solid, I'm a name that you can trust, through to everyone looks the same, and only those who genuinely are excellent in everything they do will cut through. And so I think the world is going to change dramatically. Today, I'm going to be interested to hear, from a brand valuation perspective, this space is filled with brands, and my guess is they're all kind of much of a likeness. I think over the next 10 years, it's going to dramatically change with a couple of very big winners and a lot of big losers.
Good thoughts. David, let's get your perspective on branding and growth. How does branding support long-term growth for financial entities?
If I may, I'd just like to comment on trust first. I know I talked about it a minute ago. The thing about financial services is it's the biggest industry in the world by far, if you look at all its aspects, and it covers the most important things in people's lives, both personally and corporately. It is exceptionally important to everyone, and trust that financial institutions will deliver is central to people's lives and to the success of companies and even the success of governments. So nothing is more important than believing you can actually trust in a brand. Will they pay the insurance claim? Will they give me a good return? Will they not go bust? So financial services needs brands more than anything else. And I think there are standout brands in financial services that really do that. And that really answers your question. If there are brands that stand out as delivering, people will come to them and they will stay with them. And therefore they will give them their work, they will refer them. It's a virtuous circle. More and more comes to those brands if they can be trusted. So it's very important to long-term growth.
Thank you. Mohammed, how does a strong brand contribute to resilience amid market fluctuations?
So again, whenever there's a time for changes or challenges that, or cycles or market cycles, people, they tend to work with the brands that they have the history of trust and credibility and track record of achieving things. And again, going back to the point that how can the brand reflect all your activities from an investment point of view to explain everything and to give this kind of track record that will give this kind of trust for everyone is understanding your story and knowing what you are doing. So whenever there's the time of the cycle is changing, that will trust that I can keep going forward with dealing with this brand on all level. And it will give you an access on different levels. It's not only on the level of just finishing an investment, but as well dealing with your people internally in your organization for them to trust that this brand that I can trust to stay during this time of change with this brand, or the people that you work with, the vendors, the contractors, etc., etc.
Great points. Thank you. Greg, one more for you. What role does branding play in maintaining investor loyalty?
I mean, it's a similar question to what you just asked, Sayyad. It's like, how do you keep going and stay through thick and thin? Probably communication, honestly. And I don't mean communication in advertising. I mean being open and transparent around what you're doing, why you're doing it, when things have gone wrong, why, what is it that you're trying to do. It's an interesting piece of research we did where you could track people who really understood the PIF brand, understood what it was trying to achieve, and then those markets where they didn't understand. And the correlation is enormous. The more you understand it, the better the strength of the brand, the less you understand it. And that seems rational, but actually, if you think about the industry as a whole, it's not an industry that talks a lot about itself. It's an industry that, by definition, kind of stays under the radar, covers up a little bit what it's doing, and kind of glosses over and will just do returns. But actually, I'd argue it's the opposite. I think we need to be explaining a lot more. It reminds me of the private equity space. I did an analysis where we're looking at every single private equity firm there, and I probably missed a few, but all of them bar one, Sequoia, basically on their homepage only talks about themselves. That's it. They only talk about themselves. They're not actually explaining what they're doing, but they're a private equity firm that's investing in operating companies. So when we worked with Advent, we said, this is the trick. We've got to change this. So on your homepage, we want you to talk about your operating companies. So if you want to keep investors coming, I think you've got to flip the narrative. You've got to talk about what you're doing, why you're doing it, and you've got to focus on what it is that you're adding value and stop talking just about yourselves in glossy terms.
Thank you. We're running short on time. One more question, Mohammed. I'm a huge sports fan, so I have to ask this. You have led PIF's amazing collaboration with FIFA for the 2025 FIFA Club World Cup and relationships with both the ATP and WTA, positioning Saudi Arabia at the forefront of sports. So, would love to hear about your sports investment strategy and how it contributes to your tremendous brand and for brand value in finance.
So maybe we can speak about just one vertical, which is our sponsorship strategy and why sport specifically is important for PIF, but we can speak for hours about sport. First of all, I don't think nothing better than sport to tell your story and to be used as a platform to communicate with your target audience. It's a global language. Everyone understands sport. And from an economic point of view, it makes 100% sense for all investments focused on. At the moment, sport represents 1% of the total GDP, and if you take it on our region, it represents 2% of the total GDP. The market of sport at the moment is $450 billion, and expected by 2030 to touch $650 billion, and by 2032 to touch on $850 billion. So it's one of the most fastest growing industries around the world. And if you add and you double click on the sport, if you go down on the level of the technology on sport and the gaming in sport, it's higher and higher in terms of the return. So from an investment point of view, it makes 100% sense. Now, if we look at our sponsorship strategy, it's not about just having our logo there. Everything we are doing in our sponsor strategy, it reflects 4 main pillars. So we have the inclusivity, we have the technology, how we work with the young generation and the grassroots to be part of the story, and how to make everything sustainable. If any sport that we are targeting is touching on these 4 pillars, definitely it's a target for PIF, and every example you mentioned, from the ATP to the WTA to the golf and E360 and the FIFA, definitely they touch on these four pillars. But again, I know that we are running out of time, so we can have another session just to tell our sponsorship strategy.
Wonderful, thank you. Extremely valuable insight from everyone here today. Thank you so much. I'd like to ask, I know we're out of time, I'd like to ask you each to take 30 seconds and add some final thoughts, if that's okay?
On the spot.
No, generally, on the topic.
Generally on the topic, I think that branding has gone from being something that was in the shadows to actually being pivotal in a way that most people don't realize because of the pressure of AI. So I genuinely think a brand is going to give you the strength to control the narrative, and if you don't, you're going to get left behind.
Well, I would say that to be best, to be a valuable brand, you have to be good at everything and you have to be best at what you actually do. But occasionally you're not. Sometimes you fall off what you should be doing for one reason or another. There are market fluctuations. Sometimes there are all sorts of different reasons why brands have a problem. The thing is, if you have a very strong brand, it will take you through the difficult times. So, there are many brands we can think of in financial services that have had quite serious problems over the last 10 years, but they recover when they have good brands. That is why it is worth investing as much money as you can to get that goodwill in people's brains, because they will forgive you a short-term blip and you carry on rising. Whereas if you don't have a strong brand, you won't.
Final word?
I think 2 things. First of all, we are proud that the studies that we ran with Brand Finance or with Lippincott, it shows that we are on the right track. We are the fastest growing financial brand around the world, but it gives us as well a lot of responsibility that we need to give more work and more activities that will allow us to keep on the right track. This is number 1. Number 2, maybe I will just end by, if you look at all your fixed assets under any company, most of them, they depreciate over time. The good brand is the only asset that will appreciate over time. So I think with understanding this, whenever you are building your strategy, it will give you another angle of how you're going to build your strategy and how you're going to execute it.
Gentlemen, thank you for your time and insights. That concludes our panel. Enjoy the rest of the conference.
Thank you.